Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that larger time frame bearish pattern playing out, and ES ended up heading down and tagging that 13.5 zone where responsive buyers were active on first test. At this point, heading into the open, the sell side can maintain firm control below 21 to 23, the pre-market resistance area. And if we continue to hold below that zone, then on the downside, even though we have supported 10.5 to 13.5, because we are now starting to see some alignment among the various time frames and they're all starting to line up pointing to the downside, we don't necessarily have to stop at 10.5 to 13.5. Now it is a valid area of support and technically buyers can be active there, but we have already seen a response at 13.5 and we do have to be cautious at this point on long setups simply because they are against the larger time frame bias and even the shorter term bias. So we need to exercise some caution on taking any longs, but 10.5 to 13.5 is valid support until broken. Below that, we have support at 07 to 08, followed by the major swing low at 2100 quarter to 2102 quarter. So if we're seeing a lot of bearish signs in real time and we're seeing sustained downside momentum, then there is potential for ES to actually head down and tag 2100 quarter to 02 quarter. Of course, we have to work through these earlier support zones first, but eventually we could still tag 2100 quarter to 02 quarter. And if we're seeing excess weakness where the other markets are continuing to sell off, the AD is trending lower, then we may even have to probe lower in order to find buyers. And below 2100 quarter, we have some pretty good support at 95 to 97 and especially at 90 to 92. So, in the event that we do get overextended into support below, then we can see a pretty decent buy response come in. On the upside, a breakout above 21 to 23 would tell us that, at least on the day time frame, things are now becoming a bit more neutral in terms of bias. And from there, we can head up to 26.28 and potentially fill the gap at 31.5. We have the overnight high at 31. And then we have the next area of key resistance at 34 quarter to 36 quarter, and the larger one at 39 to 42. So because at this point our larger time frame bias is bearish, we can expect sellers to be active at the main resistance zones above. So 26 to 28 is still an area that can attract sellers, but we'll have to exercise a little bit of caution there simply because heading up into it means that we are already breaking out from this overnight balance that has developed between 13.5 and 21. So even getting up to 26.28 tells us that at least on the smaller time frames, the bias is becoming a bit more neutral. So we need to just secure better location, time the trade better. But 26.28 is valid resistance until broken. It's just not the strongest of zones. Beyond that, 31, 31.5 is still an area where sellers can be active, and then pretty much at every zone along the way, with 39 to 42 being the larger time frame resistance zone in the market right now. So today, our focus is still going to be more on the short side that is in alignment with the directional bias. So we're going to be more active on shorts, but at the same time, we know that the market has hit some decent support. So if we do start seeing some upside momentum come into the market, especially if we're breaking above 21 to 23, then we need to reassess the situation in real time. And we can still take shorts at resistance, but just understand that at that point, the market may start to develop yet another trading range. And on the downside, even though we have support at 10.5 to 13.5, it does call for caution because it's counter to the overall bias, and we could probe lower in order to find the next set of buyers. So those are the main ideas. Let's see if the sell side can maintain control today, and we'll take it from there.